Welcome to the Plan B CRNA podcast. I'm your host, Bobby Jones, and I'm so excited that you're here. The Plan B CRNA podcast is the only show made specifically for nurse anesthetists who are exploring options outside of their traditional career paths. This is the place to expand your mind and your goals as we uncover new ways to produce side income together. Journey with me as I go down various rabbit holes to explore the best Plan B options for you. This episode is brought to you by On-Call Capital. On-Call Capital is dedicated to educating CRNAs and other healthcare providers about investing outside of the traditional stock market. On-Call Capital also provides opportunities for you, yes, you, to create passive income and generational wealth while also lowering your taxable income through investments in the apartment and alternative investment spaces. If you haven't hit subscribe yet, make sure you do that right now so that you don't miss an episode. Thanks so much for joining me today, and now on with the show. Welcome to the rabbit hole on the Plan B CRNA podcast. I'm your host, Bobby Jones. Before we get started, I have to let you know that we've recently started accepting funds for an RV campground investment. Because of the structure of this investment, I can only share the details with people who I already have an existing relationship with. So if you're interested in this opportunity or others like it, let's get on that introductory call so that we can get to know one another. This opportunity won't last long, so make sure you reach out today. Now, throughout my journey in finding a Plan B, I've gone down numerous rabbit holes to figure out which ones work for me. And since I've done some of this research already, I only think it's right to bring that information to fellow healthcare professionals to help aid in your search. As always, it's important for you, the listener, to do your own research and form your own opinions. Everyone's situation is unique, and a Plan B that works for one CRNA doesn't always work for another. Self-awareness is the key in any decision you make, since you must have an accurate grasp of your own strengths, weaknesses, and goals. Now, our topic today is one that's intrigued me for quite some time, but I haven't made the jump myself. Let's see together if that should change. Our rabbit hole of the day is, dun, 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 cryptocurrency. This is part 3 of our 4-part series on cryptocurrency. And if you missed parts 1 and 2, feel free to listen to them before this one, since you'll need the basics in order to keep up here. Today's episode is going to focus on cryptocurrency mining and how it can be used to diversify your investment portfolio. Now, if you'll remember, we previously compared the idea of mining cryptocurrency to the mining of precious metals and gems. While miners of precious metals will discover gold, silver, diamonds, or other various gems, crypto miners trigger the release of new crypto coins into circulation. While Bitcoin is the most common of the coins to be mined, other popular mined coins are Ethereum Classic, Dogecoin, Litecoin, Monero, Ravencoin, and Zcash, to name a few. But what is mining exactly? In short, cryptocurrency mining is the competitive process that verifies and adds new transactions to the blockchain for a cryptocurrency that uses the proof of work method. The miner that wins the competition is rewarded with some amount of the currency and/or transaction fees. For miners to be rewarded with new coins, they deploy complex machines to solve computational puzzles in the form of cryptographic hashes. In the case of Bitcoin, we're talking about a 64-digit hexadecimal number for a single 1 megabyte block of transactions. By solving these problems, the miners make the cryptocurrency's network trustworthy by verifying transaction information. This is to prevent double spending, since counterfeiting can be an issue, what with the ease of reproducing digital information and all. There are 3 different ways to mine cryptocurrency. You have individual miners. Anyone can purchase specialized miner hardware and connect to the internet. Of course, this was much more feasible 10 years ago than it is today, but new currencies do come online all the time. If they employ the proof of work method, regular computers or computers with high-end GPUs may be sufficient for mining them. Does that mean they'll be profitable? Not always, but you can get in on the ground floor of new or even established currencies this way. Next is mining pools. A pool is created when organizations combine their resources to obtain large amounts of mining hardware. These are often available to the public, where anyone can add their computer's processing power to the network. In this instance, the pool operator shares the rewards with pool members based on their processing contribution minus the fees for running the pool. The third method is cloud mining. This is a cloud-based cryptocurrency mining operation whereby customers pay a monthly fee for a hash rate to participate. While there's an expected return on investment, this is not guaranteed, and users take a risk by joining and paying monthly fees. I need to make a point about that last one first before we move on. Most cloud mining sites are a scam. However, there are many that actually work based on the profitability, fair pricing, and actual payouts on their contracts. Just so long as you can purchase at profitable hash rates with them. A few of the best are Pionex, Mine Dollars, Ecos, Genesis Mining, and ScriptCube. You can find more information about those and others in the show notes. Now, you'll want to do your own research to determine genuine cloud mining sites and companies that actually pay for the cost of their packages. Online cloud mining profitability calculators can provide you with an idea of the expected earnings per hash rate bought. Cloud mining profitability also depends on the mining difficulty for that particular cryptocurrency, the cost of the package, and the pricing of the coin itself. Be sure to check the mining difficulty and hash rate for a given cryptocurrency, even if they do support it for mining. Moving along, let's talk about individual miners. If I know anything about those of us in the healthcare field, we have a mostly healthy desire for control. As such, I'm sure many of you may be wondering, can't I just do this on my own? The short answer is yes, you can. But as with many things in life, it can get a bit complicated. For starters, there's a wide assortment of crypto mining rigs that you have to choose from. Let's go over them, shall we? First up, central processing units, or CPUs. These are the great-grandpappy of hardware. They're found in everyday hardware like laptops and desktop computers, and they were successful in the early 2010s. At that time, there was much less competition and so few miners that you could mine blocks for Bitcoin from your personal computer. CPU mining is measured in kilohashes per second, with a kilohash equaling 1,000 hashes. The best CPUs achieve 8 to 20 kilohash per second, and only a few exceed that 20 kilohash per second threshold. While some blockchains like Bitcoin, Zcash, and Monero feature mining algorithms that are designed to be CPU compatible, the hash rate numbers pale in comparison to other mining rigs. The next one is general processing units, or GPUs. These are much more efficient than CPUs with a much better hash rate. The first software for GPU mining was released in 2010, and it quickly took over. GPU hash rates are measured in megahashes per second, with 1,000 kilohashes equaling a megahash. Many modern GPUs perform in excess of 10 megahashes per second, with some of the best approaching 60 megahashes per second. They have the ability to process far more operations than a comparable CPU. And besides being faster and more efficient, they also have a certain amount of flexibility in being able to mine a variety of coins on different blockchains with distinct mining algorithms. Ethereum Classic is one of the most popular coins to be mined with GPUs. But of course, Ethereum is moving to proof of stake, meaning that GPU miners are looking for other profitable rewards. While GPUs overtook CPUs pretty early on, its dominance only lasted until 2015, when Bitcoin mining was dominated by a different type of hardware. Our next one, ASIC miners. Application-specific integrated circuits, or ASICs, are designed for only one purpose: mining cryptocurrency. The first ASIC miner was released in 2012, and it was about 200 times more powerful than the GPU miners of the time. ASIC mining power is usually measured in terahashes, which are a trillion hashes. The top ASIC miners can compute up to 90 to 100 terahashes per second, but it's not all rosy. These miners are pretty expensive, at anywhere between $4,000 to $15,000 per miner. It requires time to reach that break-even point, and with varying scales, electricity costs, and network difficulties, buying ASIC miners can be very profitable or simply very costly. This means that most ASIC operations must be executed on a large scale to actually be profitable, with warehouses filled with hundreds of thousands of miners. The other problem is that ASIC miners are specialized to only mine certain coins or certain algorithms. And some projects, such as Monero and Ravencoin, are deliberately structured to be ASIC resistant, meaning that they are not the most cost-effective means of mining those coins. Not all is bad, though. ASIC miner manufacturers have also released miners for Litecoin and other blockchains that use the same script algorithm that Litecoin uses. There are also Ethereum-optimized miners as well. That leads us to our final miner, though. Field Programmable Gate Arrays, or FPGAs, are often faster and more efficient than GPUs for most mining algorithms, while maintaining the ability to reconfigure themselves to mine a wide variety of coins, something most ASIC miners can't do. This kind of makes FPGAs the best of both worlds, since they balance robust hash rates with the flexibility to not get locked into mining a specific coin or algorithm. The field programmable part refers to their ability to be changed in the field after they've been delivered to a customer, and the gate array refers to the logic gates that can be programmed and optimized for a specific purpose, such as crypto mining. However, performance can vary widely with FPGA miners, with some ranging from several hundred kilohashes per second to over 20 gigahashes per second, whereas a gigahash equals 1 billion hashes. So the hash power isn't up there with ASIC miners, but the flexibility makes up for it. The costs are also more user-friendly, being anywhere between $200 to $6,000. Another downside, though, is the setup. You may need to design the gate array and the software yourself. Now, you can download a bitstream or FPGA mining algorithm to simplify the process, but this may result in a developer fee that could cost you up to 8% of your recurring profits. Now, due to the increased competitiveness with mining cryptocurrency, mining pools have become more and more common. Mining pools allow miners to combine their computational resources in order to increase their chances of finding and mining blocks on a blockchain. If a mining pool succeeds, the reward is distributed across the mining pool in proportion to the amount of resources each miner contributed. Most crypto mining applications come with a mining pool, but more and more crypto enthusiasts are getting together online to create their own pools. And because some pools have greater rewards than others, miners are free to change pools when they want to. Plus, mining pools are more reliable because they receive regular updates from their host companies, as well as consistent technical support. A great place to look for mining pools is Crypto Compare, where miners can compare the reliability of different pools, their profitability, and the availability of coins that they are interested in. Now, this is all well and good, but there are some economic factors to take into account as well. First is electricity consumption. This is what runs your systems 24/7, and it can run up a substantial bill. In fact, Bitcoin currently consumes an estimated 150 terawatt hours of electricity per year. That's more than the country of Argentina, which has 45 million people. In regions where electricity is generated using fossil fuels, Bitcoin mining is considered a hazard to the environment. As a result, many operations have moved to places with renewable sources of energy. Next is mining systems. We've discussed this a bit already, but suffice it to say that desktop computers and gaming systems are really only fit for mining obscure cryptocurrencies. The mining process can heat those systems up too much and cause bandwidth issues on a home network. As such, ASIC systems are often the main infrastructure investment for crypto miners, with the prices in that $4,000 to $15,000 range. Even with that expensive ASIC system, a single unit may not even produce a single Bitcoin, which is why mining pools of hundreds or thousands of miners exist. And then finally, there's the network infrastructure. Surprisingly, network speeds don't make a big difference in the mining process. However, you must have an internet connection that's available 24/7 without interruption, since interruptions only make the process more time-consuming and prone to errors. The network should also have latency from nearby mining pools. Dedicated networks reduce external dependency. Of course, the total cost for these three inputs should be less than the output, which is the coin price, for miners to generate profits from their venture. In the case of Bitcoin, most mining operations can keep the cost of mining a single Bitcoin to between $8,000 to $12,000, which means that you can still mine and make money, even though the price is currently only around $20,000 for a single Bitcoin. Another cost that you'll need to consider, though, is taxation. Miners face tax consequences when they are rewarded with crypto or when they sell or exchange reward tokens. Since the tax laws haven't yet recognized cryptocurrency as investments per se, the coins are taxed as regular wages instead of being subject to those lower capital gains taxes. And that can really affect your returns. If you've bought individual miners, then luckily you can write those expenses off as they depreciate. An individual miner will last around 5 years or so. So you can take the price and divide it by 5 to get the amount you can write off each year. A unique factor of mining is related to price fluctuations. With Bitcoin, as the price of a single coin goes up, the reward for mining is greater, and the more miners begin competing for a solution to a given block. This can lead to more difficulty in problem solving since there is more computational power competing for the same piece of the pie. When the price of Bitcoin falls, as it has done recently, There tends to be less competition as computational power is taken off the network and mining becomes easier. This means that you can make money in good times and in bad, so long as you keep your costs under control and the price of Bitcoin stays above that cost. But what if you want to get into mining, but you don't want to do any of the work? There are a few ways to do this. We already talked about cloud mining, and while there are viable cloud mining opportunities out there, there are even more scams. So be careful. The next one is something that I've already alluded to as well. You can contact a company that houses miners and see about purchasing individual miners that they house for you. You can write off the expense of the miners over time, and the mining house does all of the work in maintaining and running the machines. You make your cut after they take out expenses and their share. The idea is to make your money back within the first year, and then the remaining 4 to 6 years of the machine's life are just profits for you. Another option is to simply buy some crypto mining stocks for your investment portfolio. Bear in mind that while these stocks can be volatile, just like the overall cryptocurrency markets, they are also subject to market risk, which simply means that in the short term, if the overall stock market suffers, then they will likely suffer too, regardless of their fundamentals. Some of the most notable mining stocks are Canaan Incorporated, Hive Blockchain Technologies Limited, and Bitfarms Limited, Marathon Digital Holdings Incorporated, Riot Blockchain Incorporated, and Hut 8 Mining Corp. Granted, even the best performing of these has lost about half of their value in the last 12 months, but that's crypto volatility for you. Oh yeah, and you can also look into crypto mining ETFs, such as Amplify Transformational Data Sharing ETF, ticker symbol BLOK, BLOK, or Bitwise Crypto Industry Innovators ETF, ticker symbol BitQ. But BitQ has lost about 80% of its value in the last year, and Block lost around half of its value too. This is when crypto enthusiasts will trot out the Warren Buffett saying, "Be fearful when others are greedy and greedy when others are fearful." Of course, I'm not a financial advisor, so I'm not advising you on any of this, but I have attached some articles to help you with your own research. And the last option I wanted to bring up is starting to catch fire in the private investment space. There are actually Bitcoin mining funds that you can invest in that are outside of the stock market. They are set up similarly to syndications in that they have general partners who set up the fund and manage the day-to-day operations, and they allow limited partners to co-invest in privately held industrial-scale Bitcoin mining companies. A typical minimum is $50,000 to invest, although a lot of private equity has been dumped into them over the last few years. One such example, Bitfury, raised $80 million in late 2018 when Bitcoin was only around $5,000 or so and expenses were around $4,000. Just this April, Skybridge Capital has already raised $7 million for its new fund, and the fund actually took part in the $431 million raise for Genesis Digital Assets the year before. For those of you not familiar with Skybridge, they were founded by financier and former Donald Trump aide, Anthony Scaramucci, the Mooch. The mining fund that I've actually had the most exposure to is with Tuzi Capital, run by Ing Tang. Now, he's an apartment investor too, but he got into Bitcoin back in 2013, before it was really a thing. He has run several successful Bitcoin mining funds, and his most recent one was a bit of a hybrid. You can invest in the traditional Bitcoin mining fund, which purchases miners and puts them to work for you, cutting you in on those profits. Of course, those profits depend on the price of Bitcoin, so you can be awfully volatile with this. Projections are anywhere from a 1.5 equity multiple to a 7.5 equity multiple over 5 years. In addition, you can invest in the data center itself, providing you with a less volatile 1% per month or 12% a year. Not bad, eh? Now, as we wrap up, I want to emphasize what I believe and how it may help you make your own decisions. I personally believe in the longevity of cryptocurrency, and Bitcoin in particular. Some of the alternative coins are going to come and go, but Bitcoin itself, I don't think it's going to go anywhere. But just like I believe that staking is the best way to put your existing cryptocurrency to work for you, I believe that mining is one of the least volatile and safest means of building your Bitcoin nest egg. That doesn't mean that there isn't risk. Those who bought miners 7 or 8 months ago are seeing those same miners are half price right now in conjunction with the price of Bitcoin falling. But just like a slice of a pie, why buy it at a restaurant when you can make a better version of it at home with much less cost? You aren't guaranteed to make money when you purchase crypto on the open market, but you are when you mine Bitcoin at a price of $20,000 and an expense of $10,000. It's just that simple. And of course, this is a rapidly changing industry, but I wanted to make sure that you have some solid and timely resources. So I've included a ton of links for your reading pleasure, and there are also a couple of books out there. The first one is Bitcoin and Cryptocurrency Mining for Beginners by Thomas Main. This is free on Kindle or Audible, and it goes into much more detail about the types of mining rigs that you can set up on your own. And of course, Cryptocurrency Mining for Dummies by Peter Kent and Tyler Bain, second edition. Recently updated, this book teaches you how to invest in mining operations or how to build a system of your own. And that's going to do it for the show. As always, I'd like to thank you for listening to the Plan B CRNA podcast. If you found value today, make sure you hit subscribe and give us a 5-star review. This show only grows because of you. So make sure you share it with a friend, family member, or colleague to help them on their passive income journey. I also want to hear from you. If you have a question, comment, or rabbit hole topic that you'd like me to cover in an upcoming podcast, make sure you rate and review on your podcast player. I check those all the time and cover those questions in future episodes. If you'd like to know more about me and gain access to passive investment opportunities, like our recent RV campground investment, make sure to find me on Facebook, LinkedIn, or visit my website at www.oncallinvestments.com. This is Bobby Jones signing off. Until next time, be safe and take care of each other out there. Thank you so much for joining me for another episode of the Plan B CRNA podcast. If you haven't already subscribed and reviewed the show, I'd be honored if you took the extra time. It really helps to expand our reach and get the word out about the show. If you're a CRNA who is interested in sharing your story on our podcast, I'd love to have you. Please email me at bobby@oncallinvestments.com for more information. This episode was brought to you by OnCall Capital. They are dedicated to helping providers like you develop passive income and generational wealth through investments in the apartment and alternative investment spaces. Feel free to check out their website at www.oncallinvestments.com and subscribe to their free educational email series. You can find OnCall Capital on Facebook, Instagram, and Twitter. You can also check out our YouTube page, where you'll find all of the show episodes along with other educational videos. Thanks for listening, and we'll see you on the next episode.